Thanks everyone for coming. It's nice to see everyone here. This is a good and a bad thing because normally we like to keep it 30 minutes because Henry and I can barely maintain focus. But now we have a really good guest here, Pads. He'll keep us entertained for at least an hour.
Hopefully that's the goal.
Yeah. So I guess we'll start with just Pads. Why don't you tell us about who you are?
Yeah. So my background, actually, I graduated as a chemical engineer, and I went to work for 10 years before PASPA got repealed, and I found sportsbooks, and I was just started out just turning bonuses and doing the deposit thing, and then started getting like more interested and hooked into like these markets are inefficient. Came across like Bookie Beats. This was like when it was like a tiny nobody group. And then
What year was that?
2021. And I think for like a year, I was just like, we were just finding like small edges here and there and finding, arbs, just small stuff. And I got hooked. But then I think like one thing led to another, and it was, we went from like steam chasing to eventually finding like SGP edges to eventually somebody stumbled on like live is so profitable, and they built these tools for it, and a lot of people started making a lot of money. And at that point, I think I went from my job to live betting to my job to live betting, started realizing that the job was holding me back, and built the infrastructure to live bet full time back in 2022. And so I've been a pro bettor now for 4 years. And big change for me was last year, the Bookie Beats guys were like, hey, we need to do something with the company. The guy was like working on it full time. It was private. They weren't making that much money as like a small company. So they were like, we're going to grow, and either you're going to come with us or we're going to shut down the company. And they brought on Ethan to come help. And the company has kind of grown since then. And I think kind of made a stamp in the industry. So I'm a part-time Discord mod as well as a full-time bettor. So.
Hell yeah, dude.
Yeah.
What a noble profession, being a part-time Discord moderator.
That's the hardest job I had.
That
is easy.
They say like being a mother is the hardest job in the world, but they've never met a part-time Discord moderator. Hey guys, good to see everybody here. Everybody having a good BetBash? Awesome. We're kind of like a business podcast in a sense. We're an industry mouthpiece. I'd love to know a little bit about Bookie Beats as a business. I think it's an interesting time to be building any kind of infrastructure for betting or trading. You see, like, it used to be you sold to a handful of small companies, a handful of big companies, and you really need to charge them an arm and a leg. This is FanDuel, DraftKings. Now you've got all the prediction markets coming online, and then the long tail of like garage band market makers, individual traders, etc. What have you guys seen on the sales side and business development side of Bookie Beats? Like, what does that look like for you right now?
Like you said, right now we're just B2C, and not to say that we haven't explored those avenues. Like, people have come to us, but like at this point, we think there's the market for these products, whether it's OddsJam or PTO, that there's a few of them out there, and they all do something good. And I think what we excel at is like specifically live betting. And I felt like that, I don't know, if we like took this off and didn't monetize it in some capacity, that like it'd be filling a void that somebody might fill, and we might as well be the one to fill that void. Mm-hmm. So in terms of growing and scaling and everything like that, like it's really hard. And I know, like, he asked me, but we've gotten asked a lot. It's like, why? How do you price it? And what are these other things? And our goal is really to have like, be maybe like 500 to 1,000 members and grow a steady SaaS model business. I mean, it's not, and obviously we'll explore other opportunities that come up, but as they've happened, nothing's really been there. So
how do you think about the relationship of the Discord community and just like even owning that to the core business vertical? Like if you stop making money selling the subscriptions, how much effort would you still sink into Discord moderating for the purpose of living the life you get to live right now, whatever that means to you?
Yeah, I mean, it's like, how much value do you put on the community kind of thing?
Yeah.
I mean, I think, I've actually talked about this publicly. Like, I think the community itself is like a third of the company's value.
Yeah.
And I think, like, there are people that are literally in the Discord that I talk to, like, who don't even use the product. Like, they're not even they're just in there. Like, I'm pretty sure, like,
is that like an IQ issue or what's going on there?
No, I mean, like, the reality is you have this community of like I would say on the kalshi leaderboard, like a dozen people are in the Discord just chatting away. And you'll see like somebody like Kobe, who I'm pretty sure doesn't use the product at all. You like post like, I'm not
Naming names.
I'm like, I have 100K on the Dodgers today, right? And it's like, why does he have 100K on the Dodgers? And like,
Dodgers good, dude.
yeah. But usually there's like a good reason, right? And like being able to like work with some of the smartest bettors in the space, I think has benefits. And yeah, I mean, I'll be honest, I make more betting.
Yeah.
So like, yeah.
On that note, you claim to make more betting and stuff like that. Well, what?
Open your phone right now.
If that is true, and we're to believe that, why would you sell Bookie Beats for $400 a month and basically potentially kill your edge for such a cheap price? Like, how are we to believe that it's actually a good product for that?
Yeah, so I mean, maybe I have an ego, but I feel like a lot of my edge isn't related to like directly what the product offers. And so like, I think like top-down live betting, for instance, like everybody in this room probably knows top-down live betting by now, right? Like it just like steam chasing wasn't really an edge in 2022 when everybody was doing it, right? You could still make decent money on it, and people that join BB do, but like I don't think at this point it's like some hidden edge that's holding me back from monetizing my betting. So I think by like releasing the product and allowing people to do that is one thing. Whether or not like somebody that comes in and I don't know takes 250 grand on the ground rule double, like, you know, I mean, maybe that held me back, but like I would have also had to been online at that time to capture that. And I think it's really easy to say like a tool like this, how to monetize it best is easy to keep private and like in like a short setting, but like in the long-term aggregate setting, I don't know. I think I don't have any regrets releasing it.
That's fair. And for what it's worth, I think the product's very good. I'm in the Discord chat.
Yeah, you are there. You're in the weeds. I'm the leaderboard in the chat.
I would go in, but I think people would make fun of me, so I don't
They make fun of
participate
me all the time.
Yeah.
I'm old.
Every once in a while, Chris will show me memes that originate there. I'm like, I don't think I can handle this.
I don't think you could either.
Yeah. We talk about like, I think we give away, edges on like doing this show. Like a lot of them are very targeted. You'd have to, run a team of prediction market traders to care about it. But the upside for us is the kind of professional validation and stamp of approval, right? So if we go to like raise capital or hire people, they can kind of quickly check that we're legit. Does that matter to you? Are you like actively hiring more people or recruiting in a way where you feel like having a public persona is valuable to you?
I mean, I think it's a public persona is good for the B2C side too.
Yeah.
And it's growing that side. And like I said, people are joining to not even use the product and just join the community. Like, so from that standpoint, sure. And I mean, we'll explore other opportunities as they come up. The PM space has kind of changed the landscape a bit. So, but yeah, I mean, in terms of legitimacy, I don't think too many people question it at this point. I mean, you use the product.
Oh,
you like it.
I love it.
So,
I was saying, got to play devil's advocate here.
yeah, no.
The PM stands for predictions. Do you have predictions for the next 12 months? What's going to happen? What's the vibe going to be? I'll give my history lesson for BetBash. 3 years ago, the vibe was like, oh, you can't get accounts, you can't get down, it's all drying up. I don't even know if I'm coming next year. Last year, there was like this palpable anxiety of like, oh, PMs might kind of change everything. How am I going to be positioned to escape the permanent underclass? And this year, like these are by far the best vibes I've ever felt at BetBash. And even like the dinners I've been going to have been like one guy picking up the bill for 50 people. I'm like, oh, he's eating good. Like he's had a good year.
Yeah, we had a good dinner. Yeah.
Yeah, right. So so with that in mind, and that's wonderful. I think it's wonderful for everybody in here. And also shout out land-based casinos, dude. When we're in Nevada, we got to rep land-based casinos as well. But what do you think the energy's like at this conference 1 year from now?
All right. So I think it'll be lower. I think for right now, like, and the PM space is growing so fast and like the rec flow is growing, outpacing like market making. So there's a lot of opportunity for like tons of new angles. Anytime like when PASPA was repealed, like, I mean, BetBash was awesome back then too, but you're right. I've been in here for 4 years and every year it's shifted. But I do think it's important, that said, like to kind of game theory what the landscape's going to be in a year so that you can be well positioned to attack it. Yeah, it's funny. Like we met last year, Fluck and I did, and we like talked strategy, and that strategy that we talked
completely useless.
Useless. Literally all of this.
That sounds like every conversation I've ever had with him. Last year, I was at the forecasters party talking through stuff with some of our mutual friends for like an hour on all of this. And then those guys made fucking shirts about me making out with dudes at the forecasters party. So that was my experience.
I like that said, like, I don't think next year we're going to be talking about like the England-Mexico game.
Right.
Like, I don't think that can exist for long. Like, that was so out of whack and so unusual that like, I hope a lot of people in here made a lot of money on that.
So, telling back to like our previous conversation from a year ago, when we met, we were both really heavy in like legals and we were talking about how do we like get down, how do we size and scale, and we were discussing strategies there. So if you want to talk briefly, like when you say infrastructure, what do you mean for that? And then also, how did you transition from legals to PMs? Are you even involved in legals still?
Yeah. I mean, in terms of like scaling, there's only so much you can say about that. But like, I saw the opportunity back in 2022, then, how to live bet, how to prime accounts. I got very good at priming accounts and then how to live bet in a way that didn't sound off a lot of alarm bells. So, yeah, and that's kind of what we talked about too. I would say a year ago. I don't want to bust anybody's edge that's still doing that, but yeah. And then in terms of like the transition to PMs, I mean, the reality is when you get really good at live betting, and we can talk as much as you want about like live taking when we get there, but that's kind of what I'm known for. PMs just offer like the amount of liquidity and the price you can get on some of these spots. Like you'll never see like 70K on I don't know, like a 3-way money line. No, on like a midday baseball game. And like, you see that on PM. So like, if you have an edge, the scalability of it is just insane. So, in terms of transitioning, it's becoming like, at what point is your hourly better just spent working with PMs?
And this is a PM podcast, so let's start there. Let's pivot to more industry stuff. So for you personally, what % of your volume is taking versus making?
So like for making, I think making is like pretty straightforward. And I'm guessing most people I've talked to that are involved with PMs here are making pretty aggressively. And making, you're basically pricing stuff in the same way. The goal, right, is to have a wide net and price stuff how people know how to price stuff, which is pretty much top down. I would say most people are doing that. And pregame, you put it up and you're competitive for that like 3 to 4% ROI, right? Live taking is a lot different in that like the spots you find, the ROI is like, it can be extremely high. I mean, we've seen spots that are like, they're rorts, right? They're like 400%, 500% ROI. So in terms of volume, my maker volume is much higher, probably definitely like 60, 70%. But in terms of ROI, it's tiny. And then the taker volume is what makes up the rest of it. But in terms of raw profit, it's probably the most of it.
Fair. And then Henry loves this question. So we have some strong opinions on sharp takers.
Yeah, no, I love sharp takers. So let's go.
So when can
Are they people?
Yeah.
I don't know. Look at those guys. What do you think?
They're kind of selling me this murderer's row over here we have of Bookie Beats. Hey, this is such bad radio. Yeah. Go ahead.
When can a sharp taker be good for the ecosystem of the exchange? And not just, because the sharp takers are people too. Like, fuck the sharp takers. Like, how do they support the exchange as a whole?
So I think at a certain point, like, what's the goal of an exchange, right? It's to trade and have volume and make money off the fees, right? So once you get, obviously for an early exchange, if your entire ecosystem is sharp takers, like no maker is going to want to go in there unless you're paying them money, right? Or they're vertically aligned or trying to scale or something, right? So like they're not going to voluntarily go just get eaten by sharks. But I think like at this point, I don't think like kalshi cares. Like, do you think kalshi cares when I take 70 grand off SIG?
Kalshi does not care.
Yeah. So you
shout out Kalshi.
Yeah, you get to a point where your ecosystem and your rec flow is good enough that like if the maker ROI drops from 3% to 2.8, they don't care. They're getting money off the fees that would have never occurred otherwise, right?
I mean, the point at which Kalshi cares, right, is when right now valuations are driven entirely by volume. Every additional dollar traded, they just capture in raises, right? It harkens back to the days of the customer acquisition bonanza of OSB, right? Where it's like, why does Caesars give me $3,000 to sign up? It's like, because every new customer drives the stock price so much higher that they are not incentivized to do proper math. But then at some point, somebody actually started looking at the ROI on a marginal customer and was like, oh, these businesses are not what we thought they were. And a lot of those stock prices went down. So at some point, Kalshi and others are going to have to show what the lifetime value of a customer is. And they're going to also renegotiate or consider like implement fee structures and whatnot that maximize how much of that revenue lands on their books versus the market makers. And the market makers are going to have honest conversations about them that say, based on the order flow that you ingest, this is what we can support, right? You can only tack on so much fee before it's like this flips the numbers for us. So that's where it certainly does not show up in the numbers today, but eventually it shows up through that mechanism.
Yeah.
Your response?
I mean, I still yeah, you're right. I mean, but like you can negotiate fees where the toxicity on takers is highest.
Yeah.
And that's what happens. I mean, like they don't have any fees on there's a reason they don't charge fees for makers on props, right? They want to make and where they're going to charge makers for fees on other markets that are easier to price and don't have as much toxicity, right? And the same with live.
I think the PMs have been wise about that.
Yeah.
Everybody's doing something different, but I feel like everybody kind of generally gets what's like supporting ecosystem health.
And you guys implemented fees on live because I'm assuming that no market maker wants to get in there for free and just get eaten by sharp takers. So you put a fee in and all of a sudden you can do more creative things with that revenue, right? So, yeah.
So on that line too, I have another question. So, it's Kalshi's all nice and well, but there's another exchange. You might have heard of it, Novig. Yeah. And a little bit smaller than Kalshi. But, the problem is how do you grow an exchange without getting destroyed by sharp takers who Rex might come eventually or might never come. Sharp takers will be there day one. And if you don't have enough Rex, how could you possibly, how can you grow an exchange with sharp takers?
I mean, isn't that like every sportsbook model that's ever existed? Not sportsbook, but any business that, you need the income source, which is rec bettors, right? And that costs money. And you've already paid a lot of money to develop an awesome app, right? Yeah. And that doesn't shut down every day. That's apparently a challenge in this industry. Not naming anybody. And getting all these things, in line that costs money. And then a second part of that, right? You got to market and got to get the recs in. And then the third part is obviously having a full order book. And at first, that's going to cost money, right?
It costs money in terms of we're going to lose to this road.
You'll lose to some of those people. And yeah, but at the end of the day, the idea being that eventually the flow's good enough that it overcomes them. And then all of a sudden you're happy that they're maybe not you guys
and we should clarify that none of this is your problem, right? We're talking what are you going to do about this? It's not your business.
My goal is to make a lot of money.
Yeah, that's a good goal. I think we're broadly supportive of that. Yeah.
And I don't know. I mean, if you guys can't handle us and have I don't know, that's a win for me, I guess. If we make money off you, I'm not going to be too sad, I'll be honest.
Yeah. No, that's
we also have some live questions coming in, and I encourage anyone, we'll try to read them here. I have a good one.
Do they have instructions up somewhere on how to do that? Is that clear how to operate? Okay, great.
If it's not clear, people need help. So in regard to sharp takers, are you guys changing your positions after seeing the positions they took? So, I'll ask that for you, Paz, as a maker yourself, if someone takes into you for a big size, are you oh shit, maybe I was wrong?
I mean, you have a thesis on why it is. Obviously the context of the fill and everything that comes in with it. But if you're seeing, $16 placed on Mexico, it's so I think there's some context there. But if you're market making, home runs or something like that, and then some no-name home run you get max filled for, you might be okay, maybe let me look at this. What happened, right? So, but yeah, you got to contextualize it a little bit.
I think on our end, it's trying to see if we can parameterize what about it makes us think it's sharp, right? Limits just went up at Pinnacle, and then all the lines moved this way, and then a bunch of exchange trades came in this way, and everything went right back to where they were. I could assign a trader to sit there and stare at the screen every morning when that happens, or I could say, can I actually programmatically detect this, and then I don't have to ever worry about it again? Or,
and like then you do your cross checks, you check your CLV, you look at when it was filled, what was it going on with the market, when did everything steam, and then like you said, it's like maybe you decide to make wider at that point. I don't know if you guys can as what you're in your capacity, but
I think that speaks to like when we talk about how does a small group or a garage band group like continue to thrive as the biggest market making groups get bigger and bigger. And a lot of it comes down to like when we ID stuff like that, we might talk about it for 5 minutes and say, is the effort it would take to resolve this going to result in more P&L than building the number one thing we have in our stack? And it's almost always no.
Yeah.
Whereas like a smaller group can say, I'm like honed in on this, and this is a, couple hundred or a couple thousand EV a day spot as long as it's alive. It's like, I'm grinding this, right? And that's the kind of thing that I think creates alleys for everybody to eat right now.
not much to add to that.
All right, fair enough. All right, so I wish is John here, GP? Because he loves this. What are your thoughts on penny jumpers and tick sizes in general? We used to have the Novig used to have the Descents. Now we're up to the half tick size. You got the full tick. What do you like?
Well, we'll start with penny jumpers because I think like penny jumpers are like market makers that complain about penny jumpers to me is like, I don't know why it bugs me so much, but it's like, just deal with it. Like if you don't want penny jumpers, you know how you fix that? You quote at 1 cent on 1 cent width, right? Like there's ways to, just
problem solved.
like figure it out. I'm just not sympathetic, right? Like, I don't know. You can take like, there's things you can do to penny jumpers to punish them too. Just got to get creative with Claude, I think. So I don't know. I'm not like sympathetic to that. I also too, like, I don't like Matthew Trendhale. He talked about how like penny jumpers are a net positive for the ecosystem. And I think it's true because it forces everybody to quote tighter. It's forcing market makers, if you want to get filled, you got to quote tighter. And so everything, that's just directionally a good thing for an exchange.
So,
but there are two kinds of penny jumpers.
Yeah.
One is the like main market. I'm going to keep finding like closer and closer to the center, but we all kind of agree on the mid price.
Mm-hmm.
But then there's the like new market, highly illiquid. Somebody comes in with original pricing. It pops on any sharp money to like, oh, they like Dewana Bonner under 2.5 assists or something. And there's no notion of like, we're market making this. It's a stance take, and people penny jumping that. That I think is the thing that we would always get a lot more complaints about, right? Like, why would I originate props if somebody comes in and jumps the prop? I definitely have no sympathy for somebody who's like, I was at minus 105 on an NFL game, and now it's minus 103.
Yeah, I mean, you might have a little sympathy for it, but I don't know.
Yeah.
It's like a skill issue.
Yeah.
Get over it.
all right, I have something for that, but I want to push back with Descents. It's how are you supposed to quote?
So, yeah, I think it goes back to tick sizes. Obviously, if the penny jumping is so toxic that like, I mean, I think it was like for the Masters for Kalshi, they had like, it was like Scheffler had like 0.1 cent spreads at like with walls of 200,000 contract liquidity on both sides. And it's just like, well, somebody's wrong, like after fees, like, so I think like when you get to that granular level, then you're probably too thin on the tick sizes, and then penny jumping becomes a problem, right? But if you design tick sizes properly, then penny jumping is not really a thing.
So how would you design tick sizes?
I think you guys do it great. I think the biggest problem I still have, and like this is like Kalshi and Poly both have this right now, is like on the fringes, especially live, they end at 99 cents. And there's the problem with 99 cents is that any rec who wants to cash out, right? Like they want to get the liquidity back, they pay a 1% fee. And like there's just no reason. Why don't you make it 99.9 cents and make the bonders really think before they bond? Because a 1 in 1,000 threshold is a lot different than like a 1 in 100. But that said, I mean, I don't know. You can take advantage of that. I do. So, but like I think it's not good for the ecosystem to not have really small tick sizes on the edges. So
yeah. I think also there are collateralization issues at those points too. Although if it's in the game situations, it's not that big a deal.
Yeah.
Everybody struggles to get quoters that are laying 1,000 to win one.
Yeah.
So I had this question written down. It's perfectly timed here. Can everything be simply put as a skill issue? What are reasonable things?
You're a mind reader, Chris.
I
saw these questions in advance.
What are reasonable things to be considered skill issues versus things that are needed to help market makers, and the ecosystem. Because I hear you say this all the time: skill issue, skill issue. Well, I don't want to fucking deal with it. Like, it's so
I mean, I think it comes down like the clearest thing is like, did somebody else solve this problem? And if they did in the past, then it's a skill issue if you didn't. So like, if somebody's dealing with penny jumpers effectively, and I've heard a lot of people treat them, as they should be treated. And so like, I figured like you hear them and you're like, oh, okay. So like, apparently there are ways to counter them. And
Are you sure all those people are following securities law?
this was
Sweeps law.
Like,
How does sweeps law work?
sweeps law, yeah. Sweeps law is a special variety of law.
I'm not going to get into specifics, obviously, but consult a lawyer before you do that. But yeah, I think there's certain things that are skill issues. And like, I think like one of the things that like clearly last year, like you guys talk a lot on your pod about like court siding being a problem. But I think in a lot of ways, like combating court siding is at this point, if you're not doing it, it's kind of a skill issue because the best live makers out there are doing a pretty good job combating court siding.
I'm going to push back a little bit there. I hear what you're saying. On stoppage, like, yes, it's easy. You can comment them in play, some key things. But if like there's a pass, if it's a 40-yard pass and there's like that 2-second, 3-second window with the ball's in the air, you can't possibly quote for big size. It's too risky there. And Rex do want to place a trade all the time. And even the people that have solved for it by pulling liquidity for brief spurts. If we had a timer, we could have huge liquidity permanently. And no, it would never
Or
have to-
counterparty information while we're at it.
Yes, exactly. So
that's kind of what I'm getting at.
yes, why?
I think so my whole theory on like timers are inherently, I mean, slippage sucks. So like if you're a rec and you go to place $100,000 bet on what you think was $100,000 and you double click too fast and you don't see, like, that's a terrible experience and whatnot. So yeah, like I get the 40-yard pass thing, but like what % of the actual whole game are you pulling liquidity in those scenarios?
No, fair. I mean,
It's a small finite amount of time. I think what's actually a lot more frustrating is like when you go to click a bet and then you wait 5 seconds and then that moves 2 cents because whoever it was that was market making that saw that penny was different and then they moved to follow them and then you don't get the liquidity that you wanted. Like that's a frustrating experience for sharps and recs.
I think internally we certainly agree, like there's so much more creativity you can have on the making side.
Yeah.
And the cool thing about having an open ecosystem, and we talked to a lot of you guys this week, like different groups, even like 1 or 2 guys might figure out a solution for one particular regime of live trading that nobody wants to quote. And they're like, yeah, we know how to do this and we get tons of fills doing it because nobody else can do it. And that's our earn. And like even for us, right? Like we'll talk to Novig and be like, hey, we can support this, this, and this in live. And so if you can find anyone to do this other stuff, that's great. And it'll all kind of come together and like the product is there. And I think that part, like it is very important. I agree 100% for the exchanges and their partners to get really creative about solutions. Because like that's supposed to be the promise, right? That's why DraftKings is going down and PMs are going up, right? It's because there's this promise that we're going to be able to do all this stuff better. So it is like lame if all of a sudden we're like, well, hold on, maybe we could reinvent OSB from first principles.
That's I think like my thing too is like if you let's say you give all these advantages to makers, like makers can't cross and take, makers have a 5-second delay, like all these things that like impact, like give makers so much of an advantage that like it feels very OSB. Like I think it's hard to argue that's like a financial product and open order book at that point too. So nobody's forcing you to quote all the time, and that's a big edge for taking. Like, so
I've come around on the zero delay. Obviously, I think it's necessary, especially it is a notably different experience for rec users.
Yeah.
But something where I flip-flopped probably 20 times in last year is, should creator IDs for RFQs exist?
yeah, I mean, they talked about this in the risk taker spot yesterday too. But
God.
the competing bot. Yeah, I think that's like one thing. Like you think about a timer impacts rec experience, a creator ID impacts it in a positive way because there's if you all of a sudden just pull creator IDs, I mean, I know where I would be. Like I could do some damage, like, so I think at the end of the day, then you'd have like they're already struggling, I think. And I'm to keep all, Like the RFQ system during the World Cup, like was stressed for certain things, right? And because they were running out of capital, I'm guessing. And
Wait a second. You just got done saying skill issue.
Yeah.
Don't create OSB from first principle. Like, what's the difference here?
I think because one impacts Rex, one doesn't. I don't know. I mean, I think
and I think anything that punishes sharp take flow does benefit Rex to some degree. That does not mean it's all justifiable.
Yeah.
But that is the flow, right? I think Andrew explained this to us. Well, shout out Andrew Courtney.
Yeah.
You did a nice little presentation today. Yeah. So yeah, like that is kind of the flow of money. But that doesn't mean you can justify all of it.
Yeah. No, I mean, we'll see what the CFTC says, but also too, like there's a difference between an open order book and an RFQ, like structurally, right? Like you don't have to quote everybody. That's an open order book, I think, is a very different argument. Yep. So,
all right. So I want to do some more listener questions, but first we have to ask the question that I think a lot of you guys have been waiting for. Whales who bet on Rex move over to PMs. Will that hurt rec books a lot? Maybe they will have to limit people less to keep bigger bettors.
So this question,
What are you guys talking about?
this is like an inside joke that leaks out and nobody else thinks. Yeah. So like Flup and I were having this debate in the Discord, and we're going back and forth about like serious stuff. And this beloved member of the community, her name is Queen Muff. She was peppering us with questions, and Flup and I were just ignoring all of them. And then she asked this one as like the end, and it was half the words were misspelled, and it was a broken question, and it completely derailed the entire train of thought. And everybody,
The crux of the question is that if the whales leave rec books, they'll have to unlimit the winners to get volume back.
not a great question.
That's a giga brain question.
But like, I do think it's like kind of interesting to explore, like people like Flup and I who are super focused on just extracting all the money out of DraftKings right now. We're not doing that as much anymore. So like, how will that impact the ecosystem for limiting? I do think it'll shift a little bit, but like not in a substantial way, I would think. So I would guess most of their mechanisms for catching sharp bettors are automated and will be unimpacted by us not being there. But
The other interesting thing is that I think every rec book to some extent is rethinking their trading stack in light of PMs, right? Like that at some level, they're going to have to be able to handle free and fair PM trading. So what does that look like? So they're all kind of like passively upgrading in that regard too.
I mean, I've already seen things on the rec side. So,
Yeah.
I
mean, FanDuel has gone to like 8-cent width on MLB money lines.
they
Like,
double the limits.
yeah, that has to be downstream of that, right? Like, okay, now we're actually paying attention. I think we can kind of lower this VIG.
Yeah.
So I guess one last question that I had written down. Do you think you'll ever grind legals again? Like if Supreme Court rules against us, and
I always think it's good to have a foot in the door. You don't know what's going to happen. I mean, this industry is changing. Like, look last year, where we were versus where we are this year. I don't know what the next year is going to hold. So, I mean, obviously, I'm just going to go where the money is. And right now,
you don't do it to provide liquidity and for the love of the game. That's what I do it for.
Yeah, no, and like building out on PMs is certainly a.
All right, so let's read some listener questions. Henry, you have anything else before?
No, I want listener questions. This is usually when we would wrap, so I might hit a wall right about now. So let's let the listeners.
All right, we have a terrible question that I'll read.
Have to read.
Well, I want to be respectful. How old is the youngest person who could beat you up? How about beat Fluffa?
Who asked?
Or
this?
Shipper.
That's so clearly a Shipper question.
I had a few beers with Shipper one night, and we were talking about like, and he said, I think I'm like at maybe like 11, 12.
Yeah,
like
yeah.
the biggest. I think I originally said 8, and then I don't know, I can't remember. I would say 11, 12. And then we looked at videos of 8-year-olds fighting. We're like, no, we could kick the crap out of those. And then we went to 11. So yeah, I would say 11 to 12.
It's a very large boy who's gone through puberty, right? Yeah, it's 11 or 12. I think that's right. Yeah.
Yeah, but
I will say I think there's a correlation between the most idiotic hypotheticals and the better predictor / sports better you are, because it's like you really need to think about these weird scenarios that shouldn't matter, but then somehow end up mattering in like niche spots.
Well, it's in the whole world. You don't know, like some kid who's got some like, I don't know, genetic growth hormone thing going, and they're like, I don't know,
So
8-year-old.
so last year at BetBash, I was at Legacy Club
Where's this going?
with Chris at like 2 a.m, and he's talking to Johnny from BetStamp, who has like a cocktail in his hand. He's like, "So Johnny, what would you make Yannick Sinner versus Carlos Alcaraz the rest of their careers? Who has more Grand Slams?" And he's like, "Man, you just can't be talking to me about that right now. Like, what are you doing?" And I was like, that's what makes Chris different, dude. It's just always on his mind, is trying to handicap hypotheticals.
All right. So we got some other questions. Everyone seems to be making money on prediction markets right now. How is this possible? Who are the losers? Everyone seems to be winning. So, Paz, you want to take that? Then we can chime in.
Yeah, I mean, I would say, the most of the people, at least that I've talked to here, are like their market making, and the flow that they're winning from is Rex, which is from probably like the 90 million people in California and Texas and all the states that don't have OSBs, and probably some other smaller percentage of the other states. But I mean, that's primarily for makers. That's where it's coming from. For takers, we are taking from, most of the people, especially that are live making, are institutions. So any money we make from them is likely coming from your SIGs and your dime lines and those companies that have live trading engines, right? So depends if you're a maker or a taker, where your money's coming from.
Yeah, and I think, like as you mentioned, like we're in a very like niche sample set here. Like everyone here is probably pretty good, and there's a wide open world.
Yep.
Henry, do you have any takes there?
Yeah, I mean, I love the interview with Jeff Yass in Wall Street Journal like a month ago, where he said, yeah, the sharp people kill us every day, and we try and hire them, and they say, LOL, no, I make more money beating you. And that's where we're at. And I think like all the traditional publications that write about PMs are like, oh, like SIG must be demolishing everybody. And then he's like, that's not really what's happening yet. What they're good at is just different, right? Like the value of like fundamental research is so much higher in sports than it is in TradFi stuff. And so
They've improved a lot over the last like 6 months, though. I mean, they're doing some smart.
they do a lot of great stuff.
They're doing
Yeah.
fine. I'm not worried about.
But I think they're set up for like their timelines and their incentives are very different, right? Like they're similar. We were talking about like kalshi volume is so much more important than P&L. Like SIG has equity in a lot of these platforms, right? So that they care about, building durable infrastructure for trading over long periods of time and onboarding customers to grow those like shares that they have in these different platforms. And that just makes it not that important to them to beat sharp flow right now. Like they're not.
Yeah, but I'm talking specifically. I've seen them do trading improvements to prevent like court siding and stuff, right? So,
well, another pet peeve of mine is people are always like, oh, any order on kalshi gotta be SIG. There's other market makers too. And it's the same. I get in the Bookie Beats Discord. Anytime someone hits a Novig order, like we got Flop and Henry, like there's other market makers, right?
Yeah, you're right. I think SIG is just the easy one to go to because I mean they're the ones who posted like we lost 100 million on the the Knicks when they came back from 29, and like I lost a lot too.
Everybody though. That's where he learned the phrase. I lost a phone book on that one.
Yeah.
That was a great. Wait, actually, on that note, I do have a side question. For obvious spots where like the rec flow is going to be one way for live, are you intentionally ever taking zero EV or better on the opposite side pregame in preparation for it so you can properly risk?
I mean, I haven't done any of that, but
any reason why not?
I guess I just hadn't thought of it. I do think though that there's like along those same lines, right? There's this tendency like with like SIG or whoever's market making, not just SIG, I guess, but like whoever's market making to like walk back based on rec flow, right? You'll see like one thing that can really help you as a live taker is you'll see like the line starts shifting more and more EV versus like traditional methods and pricing mechanisms. So like for instance, like in the NBA, like like everyone's hitting overs and they're all hitting the Knicks, so you start seeing these weird price fluctuations, probably because these companies want to stay more delta neutral and they're trying to fade price and they're trying to get action that way. And that's where you as a live taker can come in. And if you understand that like directionally, like if you think like a maker and you think what are they seeing? Why are they shifting off market? And that can help supplement you as a taker, right? You're like, I'll share some of that risk with you. So I do think it is valuable to understand some concept like that of like where they're leaning, and sometimes they lean too far.
So on that note, I know you're big live, but I'll ask a pregame question. Is CLV fake then? Because, if people are
Sure was on the England-Mexico game.
right. No, so
Yeah.
how can you say that? Like, people always preach on CLV and whatnot, but do you actually think in a majority of games now with PMs and big spots that it's completely fake?
No, it's not good. I don't think I'm a CLV truther. I don't think it's like, I think there's like obviously some markets where it breaks, and like, but like those are the exception. It's very, the Holloway fight, like we saw several things that are like obviously off market, but like, again, that's on like massive events where there's tons of rec flow and they just overwhelm the maker's risk tolerance, right? So, but in general, I would say it's.
Chris, I would say one of the biggest surprises for me as a market maker, and I've noticed it more since you've like been with us and we've been more active, is like I always thought conceptually, like live trading or whatever, as a market maker, well, you kind of just keep moving until sharps determine you've moved too much and they come back on the other side. And that sounds easy, but it turns out like there are very few people who actually trust themselves enough to say, oh, the market has overreacted, everybody has gone too far. And so to have like, I remember the game where Victor Wembanyama caught a flagrant 2 and was ejected.
That was fun.
And we determined that the line had moved too much. It's like, okay, I can conceptually see how like nobody's going to bet the Spurs right now. But it takes a lot of audacity to be like, let's fucking jam the Spurs without Wemby. I love this line. And so like that, realizing like it's a very small subset of traders who will do that. And similarly, we have a mantra at MAG, which is systems should be GTO and people should be exploitative. Like we really try not to ship code that tries to exploit, right? So like, for instance, you're only seeing $10 orders on Mexico and you go, why is the line moving? Ha ha ha. Well, we don't want somebody to realize that if they batch all their trades into $10 trades, they can trick us into not moving, right? So even though we know in practice that this is what rec flow looks like, we don't want a system that's vulnerable to a bot that does that. So we still move the line. And if we have a live trader, they might just like reset our positions and be like, we can see this is fake. But we never want something running 24/7 that has vulnerabilities like that. We like to live by the code that we could deliver to you our source code and you could read it and be like, fuck, there's nothing to exploit here.
Yeah.
So I think that's like where a lot of that comes from.
No, I agree completely. And I still like that the humans are, the bots are systematic and the humans are exploitive, is like the whole concept of like, I've heard a lot of people talking about like taker bots and things that like designing stuff to automatically take and stuff like that. And in my opinion, I don't know, and maybe somebody else is out here and they can just correct me and educate me, but I don't know any really successful taker exclusively that's doing it automatically in an exploitable fashion, because like the same things that trip up the systematic bots would trip up some edge case bots. So I would say like most of the best human takers I've seen are human, like the people that are the $1 million kalshi leaderboard people.
It is definitely the case at hedge funds that they stack trade-offs of sophistication and speed and strategies. And I think that's one thing we've looked at. Like I love the interview with the Jane Street guys that did Dwarkesh this year, where they talk about FPGAs, like these custom printed chips that are designed to turn around ticks in a few nanoseconds and just like copy trade. And you do need a human to turn it off if it's like not doing the right thing, but like you can't be that fast, but also be running some giant global risk model on top of all the data, right? And so that's the thing that PM market makers are recreating in the aggregate with those like different levels of teams right now. But it would be cool to see who sort of starts deploying all in one, like we murder every possible edge systems and what that costs.
Yeah, I mean, that's the future eventually at some point. I don't think we're there though. So,
all right, some more listener questions. So here's a good one. How can a garage band market maker scale their volume and compete with large institutions?
I mean, right now, there's just an imbalance of rec flow versus market makers. I think that this is like the whole vibe of next year. I think not as many people are going to be as happy in this room. And I think it's because like I said, that England game is like a prime example of like, will we see that next year, or will some institution come out and be like, no, we will literally put $200 million of liquidity on that because we're confident enough in this price. Right. And So I would say like kind of this like post PASPA, this is like the time to hit it and go after it. So
Yeah, and I think a favorite quote of mine. I'm going to butcher it terribly, but it's from Johnny from BetStamp, who says, "If you're not betting the limit, you're making a mistake." And
that's hard with PMs. Though.
no, but it makes sense. Where it's like, if you have only have like a 50 or 100,000 roll, and you're trying to be a market maker on PMs, if you're doing main lines, you're insane. You should be focusing on props, and once you get really good in there, scale up to something a little maybe in between main lines, et cetera, et cetera. So you should always be looking for the easiest thing that you can get the highest percentage of your roll down, and it makes sense.
Think about limits on books and exchanges like stakes in poker, right? Like, oh, I'm moving up and I'm winning here. I got to move up.
Unless it's the England game, and then you can.
Yeah,
that was
take a shot. That's just a good lineup in a big game.
When will PMs contract in programmatic latency and move towards traditional high-frequency trading speeds? Oh, Henry, you want to take that one?
Yeah, I don't know. Like,
no fucking idea.
I hope somebody calls me up when they do. I hope I'm not left out of that conversation. Right now, it's US East 1, dude. That's all it is. Like, don't overthink it. I mean, if I was trying to like hazard a real answer, I think the degree to which that level of sophistication happens really dovetails with like more and more of the TradFi products that Kalshi is pushing for, in particular, polymarket is trying to catch up with. I think sports that happens as a byproduct, right? There's kind of nobody on the supply side or the buy side who wants that in sports. I could only realistically see it happening if you start seeing very large volumes in more traditional financial contracts that a player like Citadel or Jane Street said, we can do this at size if we have a meaningful speed edge. You need to be able to deliver this kind of performance to mirror the edges that we have historically. So yeah, that's where like I probably hope I've already made my money and catch a bus out of town.
So here's a good one for both Pads, then I think Henry and I. What lessons have you taken from the polymarket liquidity rewards rollout this year? So first, Pads, in your perspective as a maker or something like that, do you think it's advantageous to the makers for the liquidity rewards? What do you?
I mean, they're making a play, right, to grow. Like we talked about earlier, it's like you have to bring in Rex, and that requires you to have a full order book. And one way to do that is to roll out rewards, right? And they're handing them out. And I think you see a couple of things like on the screen. You're going to see like insane amounts of liquidity on random markets that have a width of 1 cent that should not be 1 cent. And as a taker, you can really take advantage.
Why, when you say that, can you explain more detail? I know what you mean, but for the audience, like,
sure.
When you say it should not have a width of 1 cent, why do you say that? And what do you mean?
I mean, there's just like obscure MLB players on their alt, RBI line should not have 10,000 contracts with 1 cent width. So like, there's just the confidence in that price cannot be that accurate. And so like, you should be able to do stuff as a taker with that information, right? So,
and as a maker, how do you think like, I mean, it's optimal to be doing that timing, right?
Well, it depends, right? I mean, they're adjusting too, right? So if it's all in aggregation, right? So if they're getting so much toxic sharp flow that all of a sudden it becomes a net negative with the rewards, they're going to just increase their width and adjust. So, I mean, it's just part of the process of growing pains for them. So, but I do think like the liquidity rewards and getting them makers on board has kind of worked for them. I mean, at least in volume terms, they're doing okay. At least they're keeping the app up lately. So,
and then from the other side, for us, it's like as a maker, just like Pads, you can go suddenly very aggressive in spots, and it's totally optimal because you're getting all this extra free stuff. And then for the exchange side, it's like, well, you boost the volume really good, and is it sustainable? Like, does removing them actually just kill it all? Those are calculations that I think people will be surprised how sticky users are once you've integrated in an app, an API. You don't really want to leave, and if you're making a little bit less, you'll still stick around. Henry, you have any?
No, it's just really hard to build and deliver a product, and you pull every lever that's available to you. And ultimately, the cost of cash is very low for Polymarket. They were able to raise $2 billion at 10 or something like that. So it's just like the calculus for them is money is free. It's the most efficient way for them to to achieve anything is to throw money at it. And so you use the tools you have available to you.
But I don't know. I think it leaves a lot. I mean, just going along with rewards, like that's thinking like a maker for a while, and then using that information as a taker is a very valuable exercise to do. So,
All right. Here's a good question. Is there ever a world where the liquidity on PMs becomes so large that huge sporting events actually become vulnerable to insider trading / throwing games?
I mean, I guess but at the same time, I mean, it's not legal. So, I don't know. Everything's,
Problem solved.
yeah.
What does that stock speak?
I don't know. That's a hard question, but yeah, I think so directionally.
No, I think it's a great question. Henry and I have talked about this a lot, where it's like, when you see these mention markets up, and it's like, yeah, for like some of these announcers that are like making millions of dollars a year, you don't have to worry about them rigging it for like $10,000 or whatever. But now, if you could, for player props for like stars like LeBron James, and so is he really going to rig a game for $500,000? Like, no. But now, if you get to 25, 50 million, man, maybe some stars are like, let's make a few extra bucks. And I do think there is a world where it becomes so large that huge sporting events are vulnerable to it.
There's also the problem that some small fraction of athletes just do not think logically about these things and like throw a prop so their cousin can make $5,000, and there's no
We've never
but
seen
no,
that
I mean,
before.
no, yeah, it's like there's kind of nothing. You can't come up with a mechanism to solve for that, which is unfortunate. And yeah, I don't know what to do with
it's
that.
not legal, so you can't do it. So that solves it.
Pat, you'll love this one.
Oh, great.
This is actually a good question. How will importance of ball knowledge, fundamental analysis, change over time? You've been a big ball knowledge.
Devig to ball knowledge, dude. That's a great phrase. Shout out that phrase.
As football arrives, so like football is like the ball knowledge sport of all ball knowledge sports for live taking.
True.
And it's because it really is because there's so many human level decisions that have like a massive impact on like the spread and total, right? Like, do we go for 4th down or do we kick it here is like one of the most massive decisions and like books take positions, and usually they're like, they've gotten better at being like more probabilistic of a human decision, but like in general, you'll have one book that thinks they're kicking and then one book that thinks they're going for it, and that impacts the total. So like ball knowledge in those situations and being able to predict those is like, for a live taker, is still dominant for football.
So how do you think probabilistically in there, say Dan Campbell's a great example, super aggressive. You're like, okay, I think it's in this 4th and 3 from the 40. He's like 95% to go for it here.
It's just a different.
And he doesn't. How do you evaluate in these spots where you're like, was I right here or was I wrong? Because you can get it wrong, but be right. If I'm,
Yeah, and I think this comes back to like Rorts. Like live taking is very Rort based. It's very much like you get instant feedback, and you're wrong sometimes. So like, there's no way they're kicking here. That would be the dumbest decision ever, and then they do it. Like, so it happens, and you're wrong sometimes. But hopefully, over time, your ROI is positive enough where the ball knowledge, shows itself in money. Fair.
All right. And then another one for you, Pads. What's next for Bookie Beats? How do you want the company to grow in the year's time?
Yeah, I mean, our goal now is like we're prepping for football, getting everybody on board. I mean, football is like just like you guys and everybody else in this industry is like, it's going to be where we grow. And like this year is going to be a lot different. We're building out some pretty sweet tools for like game state and doing things, because at this point in time, like to beat PMs, you need game state, the fastest game state. So you know what's going on in the game in real time as close as you can. You can actually compete with some of these makers that have the same feeds. So that's our plan for that, and just hopefully we can grow the user base and go from there.
Sure. And then I think probably for Henry and myself, what is the offering / desired user experience Novig wants to have for live NFL? And then another one that kind of rolls into this is, what is Novig's plan to onboard more recs, and how do you expect to win this battle against Profit, Kalshi, and Poly? Henry, you want to take that?
Yeah, we're doing a national ad campaign very soon that I can't discuss, but it's going to be very good, and I'm super excited. Yeah, that'll be by these guys with their shit-eating grins. Everywhere I go with Jacob, he's got a crowd, like with investors, he's got a crowd around him of guys just looking at his phone being like, holy shit, I can't believe you guys are going to put this on TV. So very excited about that. We've actually, I think we don't have great like name recognition compared to Kalshi and Poly, who have insane like brand identity. But we've always like quietly done pretty well with Rec and Flow. We're the first PM to have more total parlay volume on a rolling like monthly basis than straight volume, which remains true. So I think it's really just about like, and I think there's a ton of headroom on awareness, and like I don't think you could really get more people in America to find out what polymarket is, right? Like their challenges now are at the product level and the retention level, whereas we could just sink money into ads, which is a great situation. In terms of offering, yeah, so we've built out the live trading team, so I think we're going to be doing like 50K per side, ascent wide or whatever at stoppage in NFL. Yeah.
What's your thoughts on that?
I like that. Trading 50K. Yeah.
I think ultimately like there's going to be a mandate for it, and I think it will either be a profitable thing to do because people really like trading live NFL, or if it's not profitable, then the venue will probably figure out liquidity incentives to make makers continue doing it, because ultimately everybody does have to achieve some level of product parity with Kalshi if they want to compete, and everybody's trying to rip an NFL season. So it's definitely going to be the time when it's make or break for everybody on that side of the ball. Yeah, that's what I would say.
Pez, I saw you get a little excited there.
Yeah, no, that's good. I'm excited to hear that. I was excited to hear you guys are getting rid of the timer, and
It's already gone.
Timer's gone. Yeah,
that's awesome.
shout out to anybody who's got fast feeds. You should trade on Novig. I'm out. Ball in there. We're like gone.
That's great.
Yeah.
So, Pez, I would ask you the same question for what do you think as a market maker optimal size should be for stoppage in NFL? For like,
for stoppage, I mean, I guess it depends. That's a loaded question because this is the first quarter after 2 minutes.
Yeah. Fair.
After the like
First half only.
I mean, size first half. I mean, it should be. I would think there's no reason you shouldn't at least have six figures on first half.
So
like I have.
This is like kind of tricky because it's like if you post it so large, you'll never possibly get filled by rec liquidity.
Well, then that's the question,
Right.
right? It all depends on what platform you're on, how much rec flow you're getting. Like what you really don't want, right, is somebody you don't want like a Kalish coming in and typing 10K on a 93 to 1, and
That's my worst nightmare, dude. Is Matt Haley's price slippage.
So like you don't want that to happen. But so you got to make sure you just got to know your customer, I guess, right?
Wow. This is a mean one to do, Pads. Why is Caesar's odds so hard to accurately pull odds on Bookie Beats?
I'm not gonna get into that. not touching that one. Sorry. Fair enough about that.
Okay. I think time for one more question. What are the differences making as a solo market maker to making on behalf of an institution, MAG? So I would consider yourself a solo.
Yeah.
So why don't you answer? What are some of your biggest like problems and advantages you see yourself?
I mean, just you guys have around the clock trading. You guys can like there's so much infrastructure you can build. You have different people like focusing on different markets, whereas like I'm just trying to find like the next thing to get on board with, right? And like you guys can build infrastructure such that you capture a much wider net. But the advantage of being a solo market maker is you can be a lot more nimble. Like I can go after stuff. If I'm like, I do not feel comfortable pricing this, I can just sit it out. Whereas I think like you guys that's not entirely accurate for what I'm guessing you guys have. So I don't know. There's pluses and minuses to it.
Anyone want to add anything there?
Yeah, I mean, once you run an organization, you run an organization, whether you like it or not. Like you do become a manager and a human leader, and you just can't escape that. You can't be like, oh, I'll just only hire people who already know what to do, and I'm just strictly adding cogs to my machine. Like the job becomes more and more human and interpersonal, and you'll have people who come up short, and you have to decide what to do with them. You'll have cultural shifts from like people joining who bring whatever their perspective is, and you have to think about like what is the overall dynamic here. Building things to scale, right? Like as you start adding engineers, right? Like if you're a solo operator and you just like are ripping Claude slop and you kind of know the limits of what you're going to do, you never read the code. But if you want to build something that's going to last for 100 years and that 20 people all manage it, it's like this has to be done properly, and that slows down development time. So I think having a grasp of the scale of all that is really what changes. And it forces you to no longer be an IC yourself. So however many people you think it might take to do your job, it's a lot more.
I think that kind of concludes it all. Thank you everyone for coming. Really appreciate it all. I hope to see you all around at BetBash, and thanks for watching the pod.
Thanks, Pads, dude. How about Pads
was
putting in
fun.
an hour? That was great. Too nice. Thank you guys for coming. This is awesome.